In this video, I'm going to be showing you a version of the strategy that I am currently working with and that I will be using for our Profit League competition that we're holding in the trading floor community. If you are not already signed up for the Profit League competition and you would like to join, make sure you do so before November 4th. I will link a video in the description box showing you what that is about and what the competition entails. But all level traders are welcome to join. And if you want more information about that, like I said, check out that video that I did do explaining about Profit League. Okay, so jumping into the strategy here. You can see some rules that are written here on the side. Feel free to read them yourselves, but I will be showing you a sell example and a buy example as I walk through each of them. I want to note just the indicators that I am using. I have two of them on. There is the easy exit indicator. I can show you the settings that I currently have set. Please note though, the settings do change depending on if I am changing my time frames. I'm currently showing you a 15-minute time frame, which is like one of my more preferred time frames to enter on, but I usually use easy exit indicator to help me get levels that pull from the higher time frames and will put them onto my entry time frame chart. So for example, I have a 1 hour, a 2 hour, a 4 hour, as well an additional 1 hour data being pulled from those charts onto a 15-minute chart here. I do like easy exit for that reason, and it allows me to have zones that are brought onto my charts. Those are the blue areas that you can see here. Those are being marked from the easy exit indicator, as well as the yellow, orange, and red dots. Those will also print, and that's what these settings are doing. If you want to know more about that, that is in the TTF community. You can go check out the tutorial videos on that. And then the other indicator is Happy Trail. Again, this is another case of being able to bring in higher time frame data onto my entry time frame. Usually I'll find areas of consolidation at them, which helps me better when I'm looking for a true breakout from them, which we'll get into in the examples, but that is the logic behind using the higher time frames and bringing them down to a smaller entry time frame for me. Happy Trail, I usually do use case 3, but sometimes I'll use case 2. It all just kind of depends. There are multiple cases. Again, if you are in the TTF community and you have access to these indicators, just go check out the tutorial videos. I explain what each case does in them. But usually I am working between case 2 or case 3. For the most part, lately I've been using case 3, and I do intend to continue to use case 3. The only other thing that I change at all really in here is just my higher time frame. For me, I find that higher time frame of 1 hour with Happy Trail, 1 hour or 2 hour, depending on if the market's moving, tends to work the best for me with a 15-minute time frame for my entry. I'm showing you an example here on the NASDAQ 100. That's just something that I personally trade. This does work on pretty much anything in Forex and almost all futures that I have seen. It's just a basic breakout strategy, or like a breakout and retest. You can do either version where you take the initial breakout or you can wait for the retest. That's totally optional. I kind of go between the two of them. It really depends what I'm seeing price action wise and if I'm going with the trend or against the overall trend. So for example, what I mean by that is in this example here, this sell that I took, I did wait for a retest to happen. And that's because when we zoom out and we look at the bigger picture of what was happening with the NASDAQ, it's clearly been in an uptrend. And there was a little bit of consolidation and then another break up. So there was more consolidation, and my fear obviously was that it would continue to shoot up, which it does do long term. But in the short term, because I do day trade, I was looking to get like a little bit of a retracement. And because I am going against the overall trend in that case, I am going to wait for the retest, and I'm going to use these dots to my advantage to help me as a warning that something is coming and I should get out. When I'm taking this type of trade where I know I'm against the overall trend, I don't look to hold these trades long term. I am just looking to get my 1.5, get in and get out. Rules for entering are the same whether I'm going against the overall trend or going with the overall trend. Rule number 1 for me is to wait for a breakout and or a retest of the easy exit zone. As I explained, these blue areas are zones. Those are printed automatically by the indicator. While the indicator is great and it really helps to draw your eye to some of these zones, there are many times where you'll see a lot of consolidation around those zones, and that the zones themselves aren't big enough to cover the area of consolidations. So what I like to do is come in and grab one of my little boxes here and just kind of draw a box around the high and low of the consolidation that is happening around that easy exit zone. That's the area of consolidation that I am talking about, and I am waiting for a clean break from. There is a lot of pressure that is happening beneath that zone that had printed. And so you can see that there is more pressure to the seller side, but that's not an indication on its own to just get in. A clean break happens here where you see a really strong bearish candle. And that is a great sign that there is going to now be a breakaway from this consolidation zone. And that is where I was interested. I did have some alerts set at these levels. You can do that by setting alert over here on the side, like a price alert. You can come on to the side and allows you the freedom to be able to go about your day and get an alert when the market actually breaks that level. That's what I usually do, so that way I'm not just staring at a computer because you'd be sitting here for quite a long time. Got a clean break here. I do not enter initially. I already explained this. Why? Because this is counter trend trading since I'm going against the overall trend. So I want to see the retest, which happens here. After the market breaks out, pulls back, tests this area, and then continues with a nice bearish candle, as you can see there. And it also has, which is rule number 2, the upside down smiley face. An upside down smiley face indicates that it is a bearish momentum that is being picked up by an indicator and that trend will likely continue. So now I have the higher time frame, because remember we're using a higher time frame, a higher time frame's confluence pulling onto this chart on the 15-minute, telling me that the higher time frames are also in alignment, that there is a bearish sentiment happening. I have a breakout from a zone to the bearish side, and I have now a bearish smiley face that is telling me that momentum has shifted from the higher time frame. For me, that along with, the basic price action reading I just explained to you guys is enough for me to say I would enter. I've had the breakout, the retest, the upside down smiley face, and then I'm going to enter it. Now, the smiley face doesn't always happen, and sometimes you'll have to just use like the most recent one. In that case, say this smiley face never printed here. That is not an entry, and I would have to continue to wait for an upside down smiley face. So in that case, I would have to wait for this second smiley face to print. The reason is because this is a bullish one and you don't want that. You really want that momentum to be confirmed, because if not, you can just get stuck back and forth in consolidation. The most recent smiley face has to be bearish. If this did not print, but this one was upside down, then that would have been okay. But because this is upright, if this did not print, that would not have been an entry. The most recent smiley face to the left needs to be in confluence with whatever direction it is that you are looking to trade that breakout with, or on the candle that you are looking to enter on. And in this case, we did happen to get that confirmation smiley face with our candle. To enter into the trade, I do like to place my stop loss just slightly above where the zone is. Sometimes, depending on how big the zones are and if there was a retest, I may go a little tighter and I may look for like a zone somewhere in the middle area of this. But in this case, I was comfortable with this stop loss and I did go just a tiny bit above the zone here. You can see where there's some wicks up in here, a few little candles. I like to use my own judgment with this instead of just always following the zones, but I do know some people who just follow the zones and they seem to do well with them. But I always give like just a little extra in case a wick or something came just popping right up there. When I'm going for something that is against the overall trend, I usually just go for either a 1R or a 1.5R. I'd like to shoot for a 1.5R, but if I were to get a dot that prints sooner, an orange dot or potentially a red dot sooner, then I would look to get out quickly of that trade. So if I can just take my profits and get out, I will. If I do not have a orange or a red dot and when I'm going against the trend, then I will hold for the 1.5. In this case, my orange dot actually came just as I was getting my 1.5. So at the close of this candle, as I hit my 1.5, I actually got the orange dot, which was like perfect timing and where I got out at. Now, hypothetically though, if this is only like a 1.2R and this orange dot had printed, I would have closed my trade there because the orange dot is signaling that something is coming soon. If you see a red dot, you definitely should probably look to exit if you are going against the overall trend. The buy examples are a little easier because they are going with the overall trend as we have already established earlier in the videos. What we would do is the same thing. We are going to wait for a breakout from our easy exit zone. We've already identified that this blue area is an easy exit zone. Like I said, I like to personally bring on like the little rectangle box and mark my areas. So grabbing the high of the zone that it's kind of trading within and the low of it. Kind of for me what my eyes are catching as far as bouncing around in this area. Now, the opposite of what we saw over here we are seeing more pressure to the bullish side here. So you can see you have a breakthrough, a retest, a new high made here, and obviously a very good, strong bullish candle that happens there. So more pressure to the buyer side. My entry does come after this really strong bullish candle print. There are other entries in here, just to make it clear. These are potential entries. So as I'm getting up to trade in the morning, this candle is actually what I am seeing. The rest of these, they just don't matter for me personally. So I'm just showing you guys my personal version of this. But there are options to enter into these other areas here. If you were a London trader, you'd have had opportunities. This initial breakout entry, a retest, another re-entry. You could have gotten in sooner. I just personally am not up until New York. So this is my entry candle. This candle prints, this looks really great for me. And you can see it's a very strong bullish candle, which is going with the overall trend. So we have our entry criteria met. So number one is we're waiting for our breakout, and we had that. A breakout and or retest. We had our breakout here. We had our retest here. We have a continuation, and we have another push here. There obviously is bullish pressure, and that would meet the criteria for number one. When we are looking at number two, which is the most recent smiley face, has to be in the direction of your breakouts. This is an example here where you're going to look back to the left, and what is the last smiley face that printed? Our last smiley face that printed was bullish. That is still the most recent smiley face. It has not changed. It's bias. We are going to continue with the bullish bias smiley face. We can count this as meeting our criteria for rule number two. Number three is we trade at the close of the entry candles. This was our entry candle and the close of it. As far as the stop loss placement for rule number four, is there anything that we would want to cover? Slightly below our easy exit zone here. And there's like a little bit of an area here that I'm targeting more to cover just in case, again, like a wick or something got thrown. But we did already retest. So if you wanted to push it a bit, you probably could have gotten a little tighter stop loss around here. I like to go a little safer with my stuff, so we'll leave it there. As far as the take profit goes, I like to target the 1.5. We are going with the trend here. I'm not going to care so much about my easy exit dots in this case. They're nice to know that I might hit a little bit of a pullback if I see one come up, or maybe the market will start to consolidate a little bit. But as long as I've already secured my 1R or 1.5R, I usually don't care too much about what the dots are doing as long as I've already secured. You can see this trade really did take off, and I was able to secure a 1.5R, meaning that I no longer was risking anything or going to lose anything, and I was able to secure a profit. And then I allowed the trade to just run. I did eventually close the trade out over at this zone. That's an example of a buy and how you would ride it to the next zone. So what I do is I just wait for that yellow square box to print and tell me that a new zone has been printed, and I usually will target that as my next area. I have found easy exit to be really helpful. I find it personally a little more useful. It helps take a little more of the guesswork out of things. And I'll just kind of scoot along here so you can see where the current market is. There clearly has been way more, and we could have ridden this trade forever, but I do day trade. I don't like to hold trades for more than a few days at a time if I can help it. If you get a new zone and it breaks above it again, that's great. It's just another entry for me in my head. I don't really stress about losing out on all of this extra. I just look at it as more potential trades because I do breakout trades. And as you can see, I had a quick one here, a 1.5 that I took. This one just really ran for a while, and I just ended up closing it because I did want to take another one. I was stacking them. That is a whole video for another day. And if you guys want to check out my videos on my YouTube channel, I do talk about stacking on some of them. But essentially what I was doing was trying to take my money here, close out my guaranteed profits so I could be able to get into a trade here with no risk. But yeah, anyhow, this is what my strategy is at this point in time. It's pretty straightforward for the most part. These are the basics of the rules that I use. There are very little exceptions to them. There isn't a ton of marking up required, maybe just extending your rectangle boxes around the easy exit zones. And this is what I will be using to compete in Profit League. If you guys have any questions, as always, feel free to reach out to me, and good luck to everybody competing.